I want to make sure that we don't get into an overly inflationary environment. As the Fed cuts in interest rate, it spurs investment, it spurs economic activity, hoping to cause more growth. More growth tends to cause more inflation. So we have a little bit of a give and take here as the Fed's chasing its tail. It's trying to prevent unemployment from becoming a problem. In so doing, maybe causing the environment where inflation could be more of a problem, and it's going to have to just keep on chasing its tail, trying to put out the fires. I am so glad I don't work for the Fed. That seems like a really challenging job. Good morning. Welcome to Life in the Markets. Today is Monday, October 27th, 2025, and we have had another interesting choppy week in the market. Market has been doing one of these numbers where it's acting like it's about to start taking a leg lower, and it chops around a little bit and then has a nice pop to the upside. This week was no different. We see that the S&P 500 was up just shy of a percent. NASDAQ was up just shy of 1.5%. The Russell around 1.3/4. Gold was down. So gold and silver were both down this week. Interestingly, silver was down a little bit more than gold. This actually includes some of the weekend activity. You guys know this. When I talk about gold or silver, I may quote the price, and the reality is that it includes trading on Saturday and trading on Sunday. They don't have normal conventional hours. So silver has had a pretty sharp decline here, and it's down about almost 7%. In the inverse, oil is up almost 7%, and Bitcoin is up about 4.5%. And a lot of that, Bitcoin, same thing, not a conventional trading day. A lot of that actually came over the weekend. It jumped 3% just on Saturday. So why? I couldn't tell you. Bonds in general were a little bit more positive this week. The 10-year Treasury dipped below 4%. It was the first time the Treasury dipped below 4% since the tariff tantrum back in April. And here we are sitting just above 4% now after dipping below earlier this week. We're at 4.013%, which is a pretty decent number for where our 10-year Treasury is. That's an important measure for like the risk-free rate of return and for other factors within the broader investing landscape. Now, Stephen, you are watching a lot of things that are going on, not just domestically, but certain international trade discussions as it may affect America. So what are your thoughts on what's going on? I'm really curious about China in particular. And are there any developments we need to pay attention to?
Yes, there are. And last week was a productive week as U.S. Secretary of the Treasury Scott Bessent was meeting with representatives from China, and they were meeting and discussing the great tariff war there between them. And he said, hey, the 100% threat of tariff increases, that actually has been a very helpful negotiating tool, which is no surprise. You would think it would be. So that has been helpful for him in getting several concessions out of the Chinese delegates, including their commitment to buy more agricultural products. He said, I won't comment on the details, but the U.S. soybean farmers should be happy about it, which is no surprise as well because China buys almost all of our soybeans, which is another reason why maybe we should diversify and not be quite so heavy in soybeans. Other things are they are also talking about postponing or delaying their rare earth export controls.
That's good news.
It is very good news. Although talking and looking into the details of it, I've seen things that say it's difficult, and it would be difficult for them to actually control and prevent those rare earths from getting to the products and companies that want it. So it's probably more wolf than wound anyways, as it always has been. So we'll see. They're also talking about reducing and clamping down on the production of the chemicals that make fentanyl. So we'll see.
Okay.
And what does that mean for the market? It probably means the market won't be upset. That's good news overall that those things are happening. So we'll see. Also, there have been some sanctions increased on Russia. So to your point of the oil price going up, Trump has announced last week that he was going to be working and clamping down on Russia's oil exports, which is, again, a tool he's hoping to use to get them to make a ceasefire with Ukraine. So that could have an impact. There are a lot of moving pieces with oil, and it's a commodity, so it's always going to be volatile.
You know, it's interesting. I hear a lot of we'll see in your discussion, and in some ways that can be frustrating. I also think it can be refreshing. But you know why? The news media likes to come out with these very bold assertions of what will be. So because this happened, therefore that will happen. And the reality is that just simply doesn't follow. We don't know exactly what the second, third, fourth order effects will be for all of these things. Many of it is just going to have to work its way through the system. So a wait and see approach, or a let's sit back and not have a knee-jerk reaction, let's watch and respond to things as they develop, is probably a wiser way of approaching the news.
Correct. Obviously, we should foresee dangers and prepare for them.
Yeah.
But at the same time, I think of James, where he talks about, specifically in regards to business, to people talking about going into another city and conducting business, and we're going to make this profit, and we're going to do this and that next year. And he's like, hey, remember, it's all as the Lord wills anyways. Yeah. So that's a key thing that as Christians and investors, we can be reminded of and not let ourselves get too far out over our skis.
Well, that's excellent. Well, with that in mind, let me jump to another interesting development this week. We had a release of the CPI, the Consumer Price Index, which showed that inflation is now on a year-over-year basis at 3%. So the price of the goods and services that you use every day have increased roughly 3% over the past year. As we look at the CPI, they actually break down the different components of CPI. And when we look at food, the price of meats, the price of non-alcoholic drinks, these things were up over 5%. So clearly more than the 3 that we had. I certainly have seen go into Costco, looking at the price of meat, of chicken, of ground beef, of steak, that the prices are not as cheap as they once were. I guess this is all the more reason to encourage your hunter in your family to go out there and get a deer, put it in the freezer, help with the overall meat costs. So go get them. We also look at the medical costs. Medical costs have seen an increase now just over about 4%, or just shy of 4%. And the largest of the increases was actually in the energy sector. Energy, specifically natural gas, get this, up 12% over the past year. Certainly an area of concern, something we want to be at least aware of, especially as we move into the winter months. Shelter was also high. It was around 3.5%, the cost of rent, and they call it the shelter component of CPI. So these are things that I look at and say, yeah, this is certainly some sign of warning. Now remember that the Federal Reserve Bank has what's commonly understood to be a dual mandate. They're mandated to maintain stable employment and stable prices. Stable employment doesn't mean no unemployment. It just means that it's at an acceptable rate. And stable prices doesn't mean no inflation. It just means kind of low inflation, kind of a low burn. What that frankly means, as we look at CPI is up to 3%. I think they're still more concerned about employment than they are about CPI right now. Yeah. So with this print, with this inflation print that came out, there is now a 96% probability of a 0.5% rate cut in the Federal Reserve funds rate by the end of the year. So if right now we're sitting at about 4%, they're predicting by the end of the year we'll be at 3.5%. Now, if the federal funds rate is at 3.5% and inflation's at 3%, you know what the real rate of return on your money is?
0.5%.
It's 0.5%. The real return on cash is now essentially next to nothing, 0.5%. So that's certainly concerning to me as I look at what's happening with the Fed's funds rate. I do think that the federal funds rate does need to come down somewhat. I'm not opposed to that, but at the same time, I want to make sure that we don't get into an overly inflationary environment. As the Fed cuts in interest rate, it spurs investment, it spurs economic activity, hoping to cause more growth. More growth tends to cause more inflation. So we have a little bit of a give and take here as the Fed's chasing its tail. It's trying to prevent unemployment from becoming a problem. In so doing, maybe causing the environment where inflation could be more of a problem, and it's going to have to just keep on chasing its tail, trying to put out the fires. I am so glad I don't work for the Fed. That seems like a really challenging job. We do pray for them to have some wisdom as it relates to this. Well, as we wrap up today's episode, I just wanted to leave you with this verse. Proverbs 22, verse 7 says this: "The rich rule over the poor, and the borrower is slave to the lender." We talk about interest rates. We talk about lowering interest rates, and borrowers tend to be happy about those things. But the reality is, whenever we go into debt, we do have now obligations, moral and civil obligations, to repay the debt. Therefore, we would encourage you, keep your debts low and manageable, and keep on trusting in the Lord. All right. Until next time, take care, God bless, and be safe in the markets.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.